Good evening, all. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for Wednesday, the 9th of August, 6:20 p.m. Central Time. So tomorrow's the big event, the CPI number. We want to see what it's going to say. What's it going to do? Where's it going to lead us? Do we have hot headline, lukewarm, where they keep taking the headline down? And of course, the core CPI has to be what you really focus on. Did it go up a little or down a little? That's really probably what it did, one of the two. We get PPI number right after that the next morning, and this is where the trade is coming alive again. So I think tomorrow's going to be interesting. Gold down tonight. The dollar index didn't go anywhere as the trade is sitting, but we got hit in the stock market pretty good. And you know, one of the things happening is the big player names, the Disneys, the Nvidias, yes, they're starting to give up a lot of those gains. And the question is, what next? Where do you go? And I know you'll have the bottom pickers coming out, but that's why they're called bottom pickers. Nvidia's chart is still good on a weekly chart, not Disney. So be careful there. That's all that I could say. And I looked at the earnings and everything else coming out, and I wish I could say that I was impressed. I'm not. I realize there's cost cutting, but whatever. The stock market tonight getting a bit of a bounce, but you know that after a big break like you had today, you make back a chunk of that as the market now sees traders come in, they'll cover shorts, they'll play the game, whatever it is. You've backed off in the market. You're not down a lot. In fact, why don't we take a look for a minute here? If you and I go back, forget this week. Last week you were down 2.6%. The week before you were actually up 0.9%. But the week before, up 0.62. So are we really down a real lot in this market? On a weekly basis, 1.5 points, that's really not a big break. Do you disagree with what I'm saying? I mean, the facts are the facts when you look at what the chart is doing, and that's exactly what it's done. You see the break here, and you can see that the pattern has been bearish, lower highs, lower lows. Swing lines to me are so darn important. If you don't know how to apply them, use our charting software. They're there as one of the studies. If you had TradingView, go to our website, iraepstein.com, and go up where it says Client Resources. You're going to see TradingView. Give it a click. That's where you can get all those to put into your TradingView if you use it. We have quite a few people that do that. Lower highs, lower lows. All right. Are we going to drop from here to the next support of the 18-day average? It would only be 43.16. It could certainly happen. Or is the market going to try to hold what we call the Bollinger Bands right here? So the battle is the Bollinger Band at this point in time. So for now, 1, 2, 3, 4 days in a row, you have hit the Bollinger Band, and you really haven't gone very far one way or the other. You're only down 0.6% for the week, so you can't tell me you've gone down very far. Yes, you've reached down during the day. Learn how to work with Bollinger Bands. We have our course. All you need to do is move it, your cursor right to the top here in the course. That's where you go get it. If you rally, the resistance is wherever the 18-day average is. Right now it's 45.59.5, let's call it. And momentum is oversold. So is this a spot where I think the smart money is deploying new money on the short side? The answer is no. But is there any reason to be long? No. Do I think people are taking some money off the table? Yes. And they'll take a look at the report and figure out what to do next. What about the NASDAQ? First, it's oversold. It's the same pattern. You can't deny with me that the Bollinger Band isn't the number that is stopping the market from dropping. If you take that off the chart, you wonder, why is it stopping right there? You put it on it, all of a sudden your eyes go, oh, I understand that. But do you understand how to work with it? Let me teach you that by moving your cursor up there. Okay, in the micro mini Dow, not hitting a Bollinger Band. But what it's doing is what I pointed out to you. It's taking these black lines right here and narrowing them in ever so much, taking for the moment volatility out of the market. The trend is certainly down. You are in oversold territory. You have readings under 30. I define any number under 30 in the slow stochastic is oversold. Resistance is right where it's been. The line in the sand, that 18-day average of closes. So To negate the downtrend, you got to take out this high. Barring that, if you fall from here, look the 35,060 level. That's where I'm looking for the support right now. In the Russell, it is much more similar to the other three indices. You keep hitting the lower band. You're not going anywhere. You've gone sideways action. You've taken in the width of the Bollinger Band. Notice how narrow it's gotten into this report. That's basically where you're at. Let's assume the market wants to let go. Then it's got to prove that it can stay under the Bollinger Band if it's going to go down for these numbers. Well, only 5% of the time you stay under that band. That doesn't mean you buy the band because you're going back up, but you have to do a lot of pushing on it to get it down there. I don't know. We'll see. In the bond market, you had been oversold and you're finally getting a bounce in the market. But the trend is still down with lower highs, lower lows. Not the case in the 5-year. So what has gone on is the 105 difference between the two 10s, just to give you an example, which got to 105, has come into 73. It's the back end where the yields have actually climbed, which is the surprise, and stayed there, and the front end where they've come down. Just the opposite of what you would think, given that you would expect that the Fed, if they do anything, it affects the immediate to the 2-year and somewhat more the 5-year and so on and so forth. But the market is saying, no, interest rates are going to stay up high longer than people think. That's what the market is screaming at you. All right. Lower high, lower and low. I'm sorry, higher high, lower and low. There's nothing there. You're caught between the 18-day average and the Bollinger Band. Now in the dollar index, as we talked about this as it was happening, I said it seems to me that you are caught between the 100-day average to the upper band back and forth. Is the market going to prove that that band is the support? I think you get your answer tomorrow. If the market comes back to the 18-day average, the answer is no. Now, let me give you a very bullish scenario to get nervous about. If the 18-day average crisscrosses the 100-day, that would be a bullish crossover. If the market fails here and gets back under 101.28, that's a very bearish move in the dollar. You're at a crux in the chart. Are we embedded? Let's take a look. Both numbers over 80 on the close today. So that's day one. Both numbers yesterday over the 80 level, day two. Not the day before. Isn't this strange? You need 3 days in a row, and tomorrow's going to be the third day. Is it going to embed or not? That's why I'm going to have a good night's sleep. I'll worry about this all in the morning because I don't have to gamble on that. The euro is going to look at it the same way. The euro is stuck at the 100-day average, trying to figure right now, does it make a move to the 18-day or does it drop back to the Bollinger Band? It is oversold as can be. You can go either which way. The report's going to determine it tomorrow. In the British pound, I think I've tipped my hand and told you that I'm still very bearish in this, but am I bearish enough with my mind to tell traders to go short when you're under the 30 level and not embedded? Absolutely not. Bitcoin, narrowing in the Bollinger Bands. That's what it's doing. It's going to keep narrowing these in. Notice the one band's right here, the other band's there, and how it's from that width coming in, and you're losing volatility. It too wants to see what the CPI does. Everything's looking for a catalyst to make a move. Is it going to be that number, the PPI? I don't know, but you can just see it on the charts. They're waiting. And the differential continues to shrink between Brent and WTI oil. They both are still with fully embedded readings. It's no surprise to me that they continue higher. Here's the problem I'm having. You're getting over on the weekly charts, the upper Bollinger Bands. Markets only stay 5% of the time over them. That's the danger. So the daily chart is certainly bullish, and bullish on the weekly, but flashing warning signs that it may want to pull back out of nowhere on you. Gasoline, this one washout in gasoline was the trap. I got caught in that right there. Don't mind telling you that. Boom. Then it bottomed again, and now it's just taken off one more time. So they waited for me. You don't feel that way sometimes? I'm just honest about it, okay? And boom, that's what happened. All right, nat gas. I told you I think something big is happening. I think a big bottom could be in place in nat gas. I'm really looking at this hard and saying, I think on big breaks, the buying opportunities are going to step in. Not here, overbought, over the band, but I think you really put this on your radar and you start looking at it in a major way. So consider that a warning that I think this market could have bigger legs than the average guy thinks about it. You hear me talking about the Bollinger Band, even right here. I say it over and over. Please consider taking that course. It's very inexpensive. It will stick with you. It will make a change in how you trade your ETFs, your stocks, your futures markets. You're going to say, there it is. Learn how to do it. Okay, how do you go about it? You move your cursor to the top here. If that doesn't work, you go to iraepstein.com under the word education and watch this next video. It'll talk about this as well. I'm Ira. You have yourselves a great day. I will talk to you all tomorrow, same time, and of course in the morning subscriber videos and in the morning flash video. Take care. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time. And on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein on the road to your education.